Today's guest is Brady Mullen. He's a representative with the Capital Resource Group in Littleton, Colorado. Stick around to the end of this video because at the end we're going to show you how to subscribe to our newsletter. You can download some free guides and you can win books about exit planning. Thank you to Zarlingo Robb, CPAs and Business Advisors in Wheat Ridge, Colorado for providing a location for us to film this episode. At Zarlingo Robb, they think like business owners. For more information about Zarlingo Robb, please click the link in our website show notes. Hi, I'm Norman A. Hood, financial advisor and host of the Exit Plan Show. I interview America's top advisors, like today's guest, Brady Mullen, to help business owners like you enjoy more personal freedom, grow your company a little faster, and retire someday on your own terms. Brady's with Capital Resource Group, where he provides a variety of business and personal financial products and services. Okay, welcome back to the show, Brady.
Thanks.
Today we're going to talk about buy-sell insurance. First and foremost, earlier we've talked about insurance for the loss of a key employee. Now we're going to focus more on life and disability insurance in a buy-sell agreement. Can you explain that?
Well, it's pretty simple when you understand what a buy-sell agreement is to understand what buy-sell insurance is.
Okay.
And without qualification, I can say that every multiple owner business needs to have a buy-sell agreement in place. It defines what happens if someone wants to retire, how they buy the other person out, where the cash comes from, how they pay for that, and trying to negotiate that at the time somebody's trying to exit is that's like me agreeing to build a deck on your house before we have terms and then trying to agree on the terms after the deck is built. It just doesn't work. It always creates problems. So that agreement puts those things in writing so that the two or more parties have an idea of how, if they want to exit, how they do it. It also spells out what happens if somebody dies or becomes disabled. If you and I are in business together, I pass away, of course I want let's say we're in at 50-50, I want my half of the business, at least the value of it, to belong to my family. That's why, maybe that's not all why I did it, but that's who I want to receive the value of that company. Now, all of a sudden, you're obligated to either be in business with my wife, which she doesn't want and you don't want, not because you don't get along, but because she hasn't run this business for the last 20 years and she doesn't want to. She would like the value of it, but she doesn't want to come into work and do what I was doing. She would rather just receive the value of it, and that's what I would want, and that's what she would want, and that's what you would want. And the other problem is you'd have, in that agreement, it would state that you have to buy my family out. Well, that's an expensive proposition. So in buy-sell insurance, you and I would insure each other so that if one of us passes away, the money is there for us to buy from the other person's heirs, whether it's a spouse or children, the value of that company so that you wouldn't have to be in business with my family. They could have the cash. They'd be free to do with it what they choose, which is what I want, it's what they want, and it's what you want. So buy-sell insurance makes sure that if one of us dies, that's funded so that there's not a huge, you don't have to mortgage the business to buy my family out. You don't have to pay them a bunch of the cash flow for the next 5 years or however that might be worked otherwise. That could be detrimental to a company. So buy-sell insurance just makes it easy. If something happens to one of us, then our families get the value of the company without further complications.
Yeah, it's pretty simple, really, isn't it?
Yeah.
Yeah, okay. We've talked about this a little bit. You talked about some of the problems that buy-sell insurance alleviates. Could you go in a little more detail with that?
Well, let's say, we'll continue with that example where you and I own a construction company together. We own 50-50. Let's say, just for the example purpose, we own it. It's worth $10 million, and so our share would each be about $5 million apiece. And let's say on my way into work this morning, I'm killed in a car accident, which is, I mean, it's not a common thing, but it's, as far as death goes, it's a very common thing. It's one of the top 10, top 5, I think in that range, 5 or 6 causes of death in the country. It just happens. It's dangerous to be alive today.
Right.
So I don't make it into work, I'm killed in an accident. Our buy-sell agreement says that if something happens to me, you're required to buy my family out of my ownership, which would cost you $5 million. Now, a construction company, it's any company, it's very rare for a company worth $10 million to have $5 million in the bank, or for the owner to have $5 million, or $5 million in cash to be somewhere. You've either got to mortgage something, maybe the business. You'd have to pay my family out in a series of payments over the next, say, 5 years, depending on what the agreement says. Or you'd have to sell some personal assets, maybe a stock portfolio or some real estate or something. You'd have to come up with $5 million because you owe my family $5 million. And my wife doesn't want to, or let's say I've got 3 kids that inherit the business. Maybe one works in the business. He may be fine not selling and continuing to work there, but my daughter, who's married to a dentist in Cleveland, she doesn't want to own a third of the company. She would like her share, and that puts a huge cash obligation on the business or the remaining business owner, which in this example would be you, to pay my family off. And buy-sell insurance, just first of all, it's very inexpensive,
Right.
and it alleviates that cash problem. If you ever need cash in the event of a death or disability, insurance is the best way to fund that because it's relatively inexpensive, it's tax-free, and it puts cash in your pocket, which is the ultimate form of currency because it's so fluid, it can do anything. So it helps you not have to be in business with my family or my kids who don't know, who don't have the experience that we've worked together for a long time. We've relied on each other's experience. My wife and kids don't have that. You don't want to be in business with them as much as you may love them. You'd rather pay them off, move along, own the business. Insurance covered all of that for the cost of the premium.
Yeah, and the nice thing about insurance is the event that creates the problem immediately creates a solution.
Yeah. That's why if you need cash in the event of a death or disability, insurance is the best way to fund that. It's very inexpensive, gives you tax-free cash, everything's done. The event that created the problem also created the solution at the same time.
Okay, great information. One other area to talk about is, so we talked about acquiring insurance for buy-sell agreements, for key man insurance. Now let's talk about not only premium, how you're going to pay the premiums for some of this, which is obviously expensive in many cases, but also the ownership aspect, maybe even more towards the buy-sell part of it.
Well, it's not that complicated. There's 2 ways that you can own it. The business can own it, or the owners can buy it individually on each other, which is in most cases the ideal way to do it. There's a little bit of a tax advantage to doing that, which we won't go into the details of that, but it gives you a step up in basis on the ownership of the business, which can save, depending on what the basis is and the value of the company, it could save the family and the owner a lot of money. The other way is to have the business owner own it, or it can be owned in a trust. But each way that it can be owned is specific to the company and what their needs are and where the cash is coming from and how much people own and how many owners there are is a big key in that, and that's just specific to the company. So in the process of defining how that will work and what kinds of insurances work in those cases, there's a few simple questions that we ask to determine what's the most efficient way to do that.
Okay, so probably the main thing to keep in mind here is you need to deal with an advisor that knows what questions to ask, and if someone doesn't ask any questions, that's probably a good time to get a second opinion.
I would definitely say that.
Okay.
That's a good philosophy on all sorts of advisors. If they're not asking a lot of questions, then they're selling something.
Right.
They do the same thing over and over, and doesn't matter your situation doesn't matter, but it has to matter.
Okay, good. Okay, so for more information about Brady and Capital Resource Group, you can visit the show notes on our website, and we'll have a link to their website there and some other contact information for Brady. And while you're there, subscribe to our newsletter. You can also download some free guides and win a copy of several different books that pertain to exit planning.